Hello. Thanks for joining me. Thanks for giving me some of your time. I appreciate it. Today, you know what? I want to touch on an article that I wrote and posted to LinkedIn about a week and a half ago. And the article's got quite a bit of comments, not necessarily in LinkedIn where I posted it, but in on other platforms. And the gist of my article was, what if interest rates are as low as they're going to be? And how I really conceptualize this, what if instead of thinking interest rates are high today, the reality is they're the best they're going to be? How would we behave as advisors if that was our position? And I'll show you the article. I'll also put a link to it below. But here's an article. It's in my LinkedIn. If you go to LinkedIn, look under for my articles. I have about 20 there. But in the article, as you can see, I quoted Edward Yardeni, John Malden, Peter Bacavar, Louis Vincent Agavi from Gavkel, Karen Harris from Bain & Company, Claudia Somm, Wolf Richard from Wolf Street, so Torsten Slok from Apollo Global Management. So I quote about a dozen economists, financial analysts, really renowned, all outside the bubble of where we work, of real estate and mortgage. And most of those economists, as do many economists not linked to our industry, think interest rates are going to stay fairly flat. In fact, some of them, like Dr. Torsten Slok, think they're going to increase. About half the economists I quote in my article suggest interest rates are probably, there's upward pressure on them, not downward pressure. And whether that's right or wrong, and I'm certainly not trying to be an economist, I'm not trying to be a financial analyst. However, if the economists and analysts that we followed, the people we trust for the last 4 years have given us hooey, have been totally wrong, and then they made excuses for why they're wrong, what I'm trying to figure out is, why are we wrong? Like, what are we not getting? How is our model, how our financial economic model is not serving us, and whose model is working? And that's the person whom I want to follow. And you've heard me talk about this before. But regardless of that, it doesn't matter whether I'm right or wrong, because like I said, I'm not an economist. I'm a loan officer at heart, right? I'm not a financial analyst. But what I am passionate about is the value of the advice we give. And for the last 4 years, given the feedback we've been giving, given the supposed data we've been told that interest rates are going to be falling, dropping, whether it's May 10th or they're going to be cut by 10 times this year, or cut 4 more times next year, or cut 3 times or 8 times this year, whatever the advice has been, it's been wrong. And what happens when we take wrong advice and then we quote wrong advice, what we do is we undermine our professionalism, right? We undermine our authority and we lessen our value. And at some point, we have to take ownership of the things that we tell our clients. Now, we are not, we're not economists. We're not going to be right. And I've said many times, adopt an economist and quote them. It makes you sound better, right? It just makes you sound more official. But let's start picking better economists to quote. And in this case, I'm not telling you to pick one of the 10 or 12 that I quote in my article. And I'm not telling you they're right or wrong. But what I want you to do is consider, what if they are right? What if I'm right? What if interest rates are as low as they're going to be? What advice would you be giving your clients today? That's what I want you to think about. Because I think that we should be selling gloom, not doom. When we suggest that interest rates are going to drop, we're selling doom. We're saying, because one of 4 things have to happen, right? 1, we have to have massive job losses. Personally, I'm not rooting for that. 2, we have to have like a world war where there's a flight to safety to our bonds. I'm not going to root for that. 3, we have to have a collapse of our economy. I'm not rooting for that. I'm not rooting for that at all. Or we need massive government intervention, and it's questionable whether the Fed can even come and do QE like they've done before, right? And so those 4 things I'm not rooting for. And when you root for those things, you're rooting for doom, right? And I don't want to root for gloom and doom. I'm going to root for positive. I'm going to say the economy is better than it's been in decades. People's wages are increasing faster than ever, especially in the bottom half. People have more wealth than ever in the United States. I'm going to sell the positiveness of it. There's a lot of great reasons to buy a home today in the United States. It's still the best path to wealth, period. Most people, there's an affordability challenge, but that affordability challenge is giving us DTIs in the high 30s, low 40s. It's not insurmountable. And in the face of all the wealth that Americans are creating, it's very worthwhile. And I'd rather saw the positiveness of buying a home and owning a home than the negativeness of someday the economy will crash and we'll get you a better rate. That's just me. But anyway, you don't have to agree with me. This is food for thought. But if you're out there advising clients, I strongly encourage you to take the positive road, to tell them all the positive things that are happening in the economy, why they should buy a house. I want to take the gloom and doom of, look, things are horrible, rates should drop anytime. I don't want to root for that. I'm sure you don't either. But anyway, so I hope my article is thought-provoking. It's certainly not, it's not supposed to be shocking. It's not supposed to be, counter to, current wisdom at all. It's not supposed to be provocative. It's been called provocative repeatedly. It's not supposed to be any of those things. It's supposed to be food for thought so that you have a well-balanced idea when you're advising your clients. Anyway, I appreciate your time. I appreciate if you take a look at the article. I'll put a link down below. As always, you can just go directly to my social media. I post at least once or twice a day on LinkedIn, usually relevant article or content or data, surveys and reports, hopefully that we find useful in helping serving our clients. I really appreciate you giving me a little bit of time. Hope you're having a great week. I look forward to talking to you again soon. Thanks so much.